Most people think getting their financial house in order means just paying off debt or saving more money. What if I told you that's only part of the story? The real question is, do you have the right foundation in place to support long-term wealth building? I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Let me share something I learned earlier in my career. Back when I got my first loan in 1983, financial success isn't about doing one thing really well. It's about having 5 key pillars working together to support your family's wealth building goals. Think of it like building a house. You wouldn't put up walls without a foundation, right? Same thing with your finances. So what are these 5 pillars? Pillar 1, a solid banking relationship. Now, this might sound basic, but hear me out. Having the right banking partner can make or break your financial strategy. I had a client recently who was paying $35 in monthly fees at a big national bank when a local bank offered the same services with no fees. That's $420 a year just vanishing. Small details like this matter when we're talking about your household cash flow. Pillar 2, your emergency fund. You know that feeling when your water heater dies at 10 p.m. on Saturday, or when your car decides it's done working the day before a big meeting? That's what emergency funds are for. Not for vacations, not for a new TV, for actually emergencies. Most families I work with aim for 3 to 6 months of expenses, but here's what really matters. Can you sleep at night knowing you're covered if something unexpected hits? Pillar 3, workplace retirement strategy. If your employer offers a retirement plan, especially with matching, you need to be taking advantage of it. I had a listener call me who hadn't signed up for their company's 401k because they were too busy. They were leaving $3,000 a year in free money on the table. That's not being busy, that's being costly. Pillar 4, insurance protection. This is where people get it wrong all the time. They set their insurance once and forget about it. Listen, your life changes, your financial situation changes. Your insurance needs to change with it. Are your deductibles still appropriate for where you are today? Could you actually cover a $5,000 deductible if you needed to? Or would that wipe you out? Shop your policies regularly. Review what you have against what you actually need right now. And here's something important. If you're supporting a family, you need protection in case something happens to you or prevents you from working. We can connect you with trusted insurance professionals who can review your situation at no charge to you. Now, if you can afford a higher deductible, I'm not giving you financial advice, but you might want to consider putting the savings that you're getting from your current insurance to the higher deductible insurance into a Roth IRA and saving that money over time, and that'll help pay for that higher deductible. Pillar 5, estate strategy. Now, I know what you're thinking. Ron, I'm not wealthy enough to worry about estate planning. Wrong. If you own a home, have retirement accounts, or want to make sure your family doesn't fight over your stuff when you're gone, you need an estate strategy. We work with an attorney-supervised trust firm that can help you create a plan that makes sure your assets go where you want them to go, the way you want them to get there, no court involvement, no family drama, just your wishes carried out smoothly. So what does this mean for you? These 5 pillars work together. Your banking relationship affects your emergency fund. Your emergency fund affects whether you can handle higher insurance deductibles. Your retirement strategy connects to your estate plan. Everything is connected. Remember, strategy beats rate always. It's not about having the cheapest bank or the lowest insurance premium. It's about having the right pieces in place, working together to support your family's wealth building. We want to see where you stand with these 5 pillars. We've got a simple tool that walks you through each one step by step. It's called Key Steps. And you can access it right now at rsrlinks.com/keysteps, rsrlinks.com/keysteps. And if you're ready to talk about your estate strategy specifically, go to rsrlinks.com/estate, rsrlinks.com/estate, ESTATE, to learn more about our attorney-supervised trust services. Thanks for listening. That is the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com.